Hello and welcome back to the Hash. Wow, look at that studio shot. That's wild. That's amazing. That's good stuff.
Wow.
Wow, we are so fancy. Dang, it's a Wednesday and we are looking good. All right, cool.
I know.
Well, thanks so
that
much for tuning
studio.
in. We are here to get you up to speed with the latest in crypto news. As always, I'm Zach Seward. I'm joined by Naomi Brockwell and Jen Sanasi and David Morris, looking fabulous in the studio. Naomi, you do have the lead story of the day, however, so lead us off.
I do. I got to say it again, David and Jen. You looking so good, David. You're just like relaxing there. You look like you're in your element, like both of you.
We're just,
Love
chilling.
I'm in complete
Just
control of my
chilling.
environment, and nobody even knows.
I love that. All right. Well, let's go and take a look at some CBDC news. So JPMorgan just put out a report that says that CBDCs can save firms $100 billion a year in cross-border costs. The report estimates that nearly $24 trillion in wholesale payments move across borders each year, and banks incur more than $120 billion in total transaction costs. And this excludes potential hidden costs in trapped liquidity and delayed settlements. And the report specifically looks at the ASEAN region, which stands for the Association of Southeast Asian Nations. So it includes Brunei, Cambodia, Indonesia, Laos, Malaysia, Myanmar, Philippines, Singapore, Thailand, and Vietnam, which operates across a diverse set of 10 currencies and contributes 7% of global cross-border trade. So it's an interesting spin on CBDCs, this time looking at it from the perspective of a bank and savings that can be made. Generally, we're looking at it from the perspective of a government and kind of the terrifying programmability that might come as a result. But there is, of course, a flip side to that, in that cryptocurrency can potentially be a more efficient method of transferring funds. Now, it really depends on the on the central bank digital currency, which tends to not be a real cryptocurrency. So we can dive into all of those details. I'm going to throw this to the group. David, I think I saw your hand go up in the studio.
So I really like this. I think we'll get into the distinction between crypto and CBDCs and some important stuff there. But just to kind of set the table for why this matters, it's not just for central banks, but also for businesses doing a lot of international transfers. Right now, the way this often works for companies that have to do really high-speed moves across borders is what's called correspondent banking, which often involves tying up a lot of money by having banks in two different places that you can then kind of transfer without moving the money, which takes so much time. And so there's cost savings here implicitly for not just the central banks themselves, but for companies. And I think it's a really great thing to keep in mind when we talk about CBDCs. And some of the downsides from a retail perspective is that as infrastructure, they definitely do have huge potential compared to something like Swift, which is, Swift is the retail version, but the way that banks work now, there's some real upside potential.
Mm-hmm.
Jen, you want to?
Jen?
Yeah.
Go for it.
Naomi,
How do we do the transfer when we're actually here in the same room together?
I know. You got to have better peripheral vision to see the hands going up beside you.
Naomi, I actually had a question for you on this. I mean, we're talking about CBDs for international settlements and international payments. And when I was reading the story, I was like, okay, this makes sense, but doesn't it make more sense for businesses and individuals who want to make these types of payments to just use a crypto and get rid of that intermediary like we've spoken about so much on this show? I'd just love to hear your perspective.
I would say absolutely. But obviously governments aren't thinking that way, because cryptocurrencies don't allow them control, and central bank digital currencies allow them complete control, and a lot more control than they currently have. So obviously the governments are only going to be exploring on that side of things. And that means that whatever the government's exploring, the banks are exploring, because there are such tight regulations around the banking industry. You've got to grease so many palms to be able to open new branches, your cross state lines, all of that stuff. So they really toe the line when it comes to what the government wants. So I don't see them going against the government anytime soon and saying, oh, we are just going to, accept Bitcoin and Dash and Zcash, heaven forbid. Like, they're never going to do that. So I think the conversation is always going to be centered around central bank digital currencies. But Zach, I'll throw to you for your thoughts.
Yeah, I was going to say, when the banks stand to make a lot of money here, this could be the most compelling case for a CBDC rollout for a lot of countries worldwide. I mean, I think this does speak to the efficiencies that some of these bigger corporate giants are seeing in a CBDC future. And it would be interesting to see if they ramped up their messaging around that as a way to move money over borders. There is the possibility that some CBDCs could run on open networks. I think a lot of that is to be determined. We've seen, I think Ukraine was doing a pilot with like Stellar to put its CBDC on that network. There are other efforts. There are other public blockchain projects that are talking with people about maybe doing some sort of CBDC integrations. But the jury is still out on that. I mean, there is likelihood that it will not run on these open networks, and I think that would be detrimental to the digital asset ecosystem. But time will tell. It'd be interesting to see where these coins ultimately end up riding on. But yeah, the fact that a banking major here with JPMorgan is saying, hey, this could save big financial institutions a lot of money in terms of getting fiat currency back and forth between different countries, I think that's going to potentially open the eyes of some regulators and central bankers the world over. So this one might be a sneakily big story that might otherwise be missed. But I'll toss it back to you, Naomi.
Yeah, I have such a big question pop up in my mind when you say that CBDCs can potentially be on open networks, because theoretically they totally can. But I have a lot of trouble understanding how that's a central bank digital currency. If it's an open network, it's inherently not controlled by the central bank. I would presume it would be controlled the same way that other cryptos are. You would need, consensus among the entire ecosystem. The whole point of a central bank is to control the money supply. So at that point, what is even the point of a central bank? And second of all, how would it be considered a central bank digital currency and not just a cryptocurrency? So it's we're kind of figuring out terminology here, and I think we've still got a lot of work to do. But let's change track for now, and I'll throw it back to you, Zach, for the next story.
All right, let's go to Sand Hill Road. We're going to talk about VC right now. Last quarter was a record-setting quarter for crypto venture capital investments. This should come as no surprise. This was a quarter that included a $900 million round for a single firm, FTX. So the fact that Q3 smashed what was previously a record in Q2 shouldn't be too shocking. But the fact that venture capitalists are rushing into the space headlong is certainly something we've been watching for a few quarters now, and it's only accelerating. So wanted to touch base on this one. Some interesting numbers in here compiled by CB Insights that do a good job of looking at the big funding rounds in the space. And this number, 6.5 billion, it's a big number, and it shows just how involved some of the biggest venture capital firms in the world are getting involved in the cryptocurrency space. I'm going to toss this to David because I think this is not necessarily a good thing. Some of these projects are finding their footing, are getting the help to get out the door, but of course, these investments come with terms, and these projects tend to have pretty significant VC bags involved. So I'm just curious for your thoughts on what you make of this record-setting quarter for crypto venture capital.
Yeah, I want to set aside the question of VCs and tokens for a second, because that's another layer of complexity. But let me ask you real quick, was that $900 million for FTX? Is that like a record round in general? I've never heard of a single round that big.
It is a record for crypto. I know that much. I can't speak to the general. I can't speak to tech
it's
writ
insane.
large, but yeah, a $900 million funding round is quite big, and it was followed up on with, of course, a $420 million funding round some months later, and that will be reflected in the next quarter's data. But yeah, $900 million, really big.
Yeah. But as far as whether you want to go with VC or not as a company, I mean, there are definitely reasons, and we're going to talk about Eos in a few minutes, and that wasn't a VC situation, but raising too much money can be a problem for sure. What I'm most interested in here, though, is the fact that this is really just setting the table for the fight to come. Not all of this money is actually going to generate returns by any stretch of the imagination. That's the entire point of what the VC model is that the bet is that 9 out of 10 of these dollars is going to go into a hole in the ground and produce nothing. And so we have to look at this round and say, this is good for the sector, but it doesn't actually, in some sense, it doesn't mean anything in and of itself. You have to pick winners and losers, see who's building stuff that actually works, and go from there. One thing to keep in mind when you look at these VC rounds too, if you're an investor or just somebody watching the space, watch follow rounds, see how many people are putting in second rounds to their own first rounds, because that's one thing that I find to be a worrisome trend. If you're a VC who's following up on something you've already put money in and you're just helping it get to a new valuation that validates your own earlier investment. That bugs me a lot. But obviously, in general, I would say that this is good. I mean, it's let 1,000 flowers bloom. You got enough money out there for everybody who wants to run an experiment, however crazy. And I love seeing crazy experiments. Jen.
Yeah, so the $6.5 billion number is absolutely insane. But I look at this in maybe a different lens. I think VCs are always following trends. They're taking big bets on the industry. And I think that entrepreneurs should look at this. And if you're developing a product that maybe doesn't involve crypto or blockchain, maybe think about how you can incorporate that into your product. And don't do it just because it's trendy, but do it because the technology is really...
I think you just said just do it because it's trendy.
No, well, okay. trendy in the two different terms, right? Don't do it because it's trendy, but follow the trend that is actually, I think, going to change our lives. So I think that entrepreneurs can take something really valuable away from this large number being pumped into crypto and blockchain firms, and maybe look at ways on how you can innovate if you don't have a project in the space.
And the other thing for entrepreneurs out there to take away from this number is drive a hard bargain. Look for somebody who's going to be a good partner to you, who can actually provide more than money, who is going to give you a fair value for the portion of the company that they're asking for, all that stuff. Naomi, sorry.
Yeah, I think that, I mean, when we're talking about trends and what this signifies, I do see a giant push across all sectors towards decentralization. But we do have to realize that decentralization isn't a desired state for so many different industries. You really need that central point to be driving innovation, to be funding it, to holding tight reins. Decentralization, though, can be like fantastic if we're dealing with censorship, or if we're dealing with ways to mitigate trust issues. Governments, for example, it would be great to have like decentralized systems of power. All of that, we're sort of exploring this decentralized world. And I think that's why there's so much money flocking into this. But I don't think it's anything new that money is flocking into crypto. The numbers are getting higher as more people get involved. But I mean, if you read like Nathaniel Popper's Digital Gold, which kind of details the history of crypto right up until I think it's around 2014, and you're looking like Andreessen Horowitz was just pouring money in back in those early days, like 2012, 2013, I believe. And so you have all these venture capitalists who've been looking at this space saying, wow, this is a giant innovation. Let's find a way to get involved. And there were so many funding rounds that he details in the book that like where you had someone say, oh, I'm going to start this business and I am thinking it'll be good. And you have all these people saying, take my money, and getting angry at these business builders saying like, why didn't you include me in your round? I want to get involved with this, and the more money these people give away to VCs, the less that, they get to keep. So it's not always desired for them to be accepting this investment capital. So it's like just this very interesting situation that's always kind of been this hot thing. But as more people learn about it, as you said, Jen, it gets trendier, just like other VCs are piling in as well. And then the existing VCs with their existing capital that they've made, increased so much since the early days, they're pouring that back in. Like it's just a very exciting field for sure. But let's change track and go to a break. And Zach, you can tell us what's coming up next.
I will. We're going to look at EOS. There is trouble in EOS land. A little bit of drama, a little bit of finger pointing. We'll talk about it all after the break on The Hash. Look at that set. Oh, man.
I know. I love it.
Oh, Naomi, I have a request for you before we go to break. Can you please start a crypto book club?
Crypto book club. Done. It's started. Hit me up for details, guys. Jen is my first participant.
and we are back at the Hash to talk about EOS. And what we have is the head of a newly founded Eos Foundation. This is a new organization that is separate from Block One, the actual firm that helped stand up EOS. And the guy whose name is Yves Lavrose says that EOS so far is a failure, basically, that the token has been a terrible investment. And he basically says that there's been a lack of leadership. And there's a lot to be said about that particular point. And the EOS has genuinely been a terrible performer, and kind of has. I think I've been, pretty guilty of this. EOS has been a bit of a whipping boy over the last few years, as it has totally underperformed the rest of the sector. And now we have this new organization that wants to turn that around, wants to do something different. And as a way to kick off that effort is basically going guns blazing on the founders and the people who have been responsible for the project for the last few years. I don't know how deep everybody is on EOS or the entire weird complexity of the EOS saga, but Zach, is this something you want to weigh in on?
Sure, yeah. I mean, EOS is perhaps most famous for being the blockchain that raised the largest ICO of the ICO era. So Block One had a year-long ICO. It raised something like $4.1 billion to build the software that powers the EOS blockchain, EOS.io. To Block One's credit, they delivered that software. They got the chain up and running, but there's been problems along the way as it relates to governance of this chain and whether or not people are using it in the wild. So as you mentioned, David, this is a relatively new organization who is looking to sort of spearhead some community movement behind getting things going again in a way that is amenable to some of these early investors in this project. And this, I think, is just sort of a bit of a mission statement. This was a leaked prepared remarks delivered to a private event in China, I believe, to about 120 individuals who were looking for a new path forward for the EOS blockchain. So interesting to see. There's definitely a lot of twists and turns in the saga of EOS and Block One. Block One notably is sort of concentrating its efforts on Bullish, which is a yet to launch crypto exchange that's going to be run partially on the EOS blockchain. That's a project that actually is going public through a SPAC deal, even though it's not yet launched, to my knowledge. The SPAC deal values Bullish at $9 billion.
Amazing.
I think in part because it's been seeded with a lot of the Bitcoin holdings that were generated in that really huge ICO way back in 2018. So lots to unpack here, and definitely the backstory is super interesting, a bit contentious, but also interesting to see that there is some renewed interest in blazing a path forward that hadn't previously been articulated before. So this is an interesting one.
Yeah, this is kind of sorry, go ahead, Jen. I saw you.
Yeah, sorry, I'll just jump in really quick and pass it off to you. I think this just goes to show that no matter how much money gets pumped into a token sale, an ICO, or via VCs into a company, it doesn't mean that it's going to succeed, just to the point that we unpacked at the beginning of the show. It doesn't mean that there are not problems behind the scenes. So it brings us back to that education standpoint. Like, if you are going to invest your own money into a project, especially in the crypto space, to really, maybe take some points from big raises, but always do your own research. But Naomi, off to you.
Yeah, this seems like a giant power play. So if we dive into this, and there's accusations of fraud, misrepresentations of the capabilities of the Block One team, and then you have this person who's the CEO of this very recently formed Eos Foundation. I believe it was announced in August. And there are things said like, the speech places the blame on Block One, going so far as to allege potential crimes. In speech, LaRose says he hopes the fairly new Eos Foundation will be able to take narrative and branding control over the project in order to counteract the disarray of decentralization. And then it ends with LaRose staking a definitive claim to leadership over the project, saying, "I'm not here to be liked, I'm here to do a job. What we've been lacking in EOS is leadership, someone who will lead by example and show up every single day working towards greatness for us all." Just some very interesting and very bold statements there. He also says that the EOS Foundation is set to step up as the project can no longer rely on the Virginia-based software company for guidance, referring to Block One. So it really seems like someone's coming in, they're very unhappy with EOS, sets up a foundation and says, listen, I'm taking control. I mean, the difficulty with this is that Block One has all the capital. So they raised all of the money. They have all of that they're putting towards developments. And LaRose is saying, yeah, we're going to, be distributing grants. We've got a roadmap. We're doing all this stuff. Are they expecting Block One to just hand over that capital? Are they expecting to do like another ICO? Like what is the play here in order to get that capital that can be distributed? Because I believe the foundation doesn't currently have that. So just a very interesting situation for someone with very little control over this project, very little power to come in, basically claim it, and then make promises without really having much leverage there. So it's interesting to see which direction this will go in. But Zach, I'll throw to you first and then throw it back to David.
I see David wanted to go in, so I will.
Yeah, sorry. I'm making all these noises because I have so many feelings and thoughts about EOS, and
I'm doing them in real life.
I'm like, oh, okay. So the 2 points to start off with here. One is, and I wish I had thought to get this graphic mocked up beforehand, but if you look at the EOS chart, it is tragic. It is up in 2018, down, and then flat. Just nothing. Flat as a desert, you might say. And so you can understand where, even though this is a recently founded organization, you can understand why people want to hear this from somebody, because as an investment, this project is a dog. And when we talk about leadership, it's really important to put it in context. Brendan Bloomer is the CEO of Block One, seems like a competent administrator, but the real figurehead of EOS at the start was this guy named Dan Larimer. He was the technological builder. And Larimer, before EOS, had also founded first a thing called BitShares, which I could talk about for hours. After that, he founded something called Steam. And in each case, he eventually stepped away from the project. And not eventually, sometimes rather rapidly. Now, what's interesting here is that we talk in blockchain world about decentralization and about how everybody is going to have a hand in building these ecosystems. But one thing that I think we can take away from the EOS case is there is an important factor here for people who can be figureheads and leaders. And EOS, and before it Steam, really had a vacuum in leadership because this guy who wanted to build the technology then didn't really follow through in terms of guiding people towards building what he had in mind. And now to have Block One pivot again away from this blockchain that they built, they raised a bunch of money on, to go and raise a $9 billion basically pre-sale for an exchange that doesn't work yet. I mean, it rhymes, right? It's weird. And so I think that we do have to look at, well, we can learn some examples by contrast, right? That Ethereum, whether you think of him as a leader or not, at least has a very strong figurehead in Vitalik, who has really been engaged with the discussion around how that ecosystem grows. And it is an important factor in the valuation and the growth and development of these sorts of ecosystems. So we shouldn't delude ourselves that we live in some kind of leaderless world where we don't need people who can provide examples and provide a path. I don't know, Zach and Naomi, you can flip a coin. Naomi?
Zach, you happy? I'll jump in just quickly and then throw to you. I will say, it's interesting. I mean, I'm a big fan of Dan Larimer. I really like his rhetoric. I know that he's been writing a book, and I'm very excited to read it. If it hasn't come out already, then it should be soon. He's always had this very decentralized mindset, and he's just a fantastic, he's a serial entrepreneur. A lot of people talk about him through this lens of, he just project hops and he never follows through, which I know isn't what you're saying. You're saying something different, David. But it's common rhetoric to hear about him. I would say that he went through and created some incredible innovation in the space. I mean, BitShares was the first ever decentralized exchange. He first kind of pioneered that technology. And then Steam was a game changer for content creators. I used it up until, I still use it, but obviously the team pivoted away and forked to create Hive because of the, there was a big controversy. We won't dive into that here. But, then Dan Larimer, when he left EOS, I wasn't surprised because I knew that he was very focused on decentralized social media. That's his big pet project right now. But it did make me worry about the future of EOS without Dan Larimer there. So I understand what you're saying about that need for inspiring figures to continue to push the project forward. That's never really been Dan's shtick. He is a technologist. He just loves building that tech. And he was probably hoping in the business partner of Brendan Bloomer to be that figurehead. And with the lawsuit, I mean, you haven't heard a peep out of Brendan. He's a lovely guy, but you kind of want to hear his point of view. But like EOS has refused to talk about anything related to EOS ever since they were subpoenaed by the SEC and were going through that settlement process. It's been very hard to get anything from them. And as soon as you get that vacuum in any sort of leadership or especially thought leadership, I really did see the effects that took on the community. So yeah, just very interesting. But I'll throw back to you, Zach, for just final thoughts.
No, just an interesting one. I mean, it speaks to a lot of challenges of finding that balance between centralized leadership and decentralized ethos. And I think EOS remains a really interesting example for this space to watch. That's all I got. I'm going to toss it to Jen.
All right, we're going to take a trip back to the metaverse. So Tiger Global led a $17.4 million seed round for Phase Technologies. Now, this is a startup that creates digital collectibles, another one. So Phase has also announced a partnership with the International Cricket Council to launch cricket NFTs on Flow and build the metaverse for cricket. So I know that I've asked on this show a bunch of times, do we need all of these NFT marketplaces? And now, Zach, I know that you have thoughts on this, but my first question for you is, do we need all of these metaverses now? We've moved on from NFTs.
Yeah,
it seems like all these metaverses are popping up. Are they just going to be like, is it going to be like, I'm in New York now physically, but maybe I want to visit somewhere else digitally? Is that what the metaverse is going to look like in the future?
I don't know. It's really interesting. There's a lot of metaverse pitches coming in to the newsroom, as you might imagine. And it feels like if you took a flight to SFO right now in the meat space, not in the metaverse, if you went to SFO and just shouted out like, I'm doing metaverse, I think
somebody would give you money.
Venture capital checks.
Money would just
I think someone
fly
would just give you money. They'd be like, oh, you're doing metaverse. It's cool. Here's $10 million. Like, I think we're at that sort of stage where like there's just a lot of excitement on what the metaverse could be.
Closing my eyes and going to a happier place.
It's certainly been catalyzed by the whole Facebook metaverse double down. So, I think this is a perfectly cool NFT project. It serves a community of diehard fans. There's plenty of communities of diehard fans in the world. Maybe cricket's not your thing. Maybe basketball is your thing. Maybe curling is your thing. Maybe ice dancing is your thing, right? So, like being able to activate those communities of passionate niche worlds makes total sense. And I think like we're going to see as many NFT marketplaces and platforms as there are communities in the world, because that's what Web3 enables, right? Like Web2 is about mass platforms. In a way, Web3 is about small dedicated communities that live online in a way that is different from our existing model of the internet. So I think as many needed is fine. I think just the metaverse angle right now is starting to feel a little opportunistic to me, but we'll see what
don't
comes
do it
of it.
It's trendy.
I'll toss it to you, Naomi. Yeah, don't do it. Just go. Yeah.
Follow the trends, guys.
Now.
Follow the trends. Yeah. The money will come.
We're gonna be metaverse journalists. We're announcing here, venture capital people. We're gonna be metaverse journalists now. All right.
So absolutely. You have money for us.
You're gonna see the checks come in.
Yeah.
Yeah. All right. Anyway, Naomi, take it away.
I would just say, like, there's such a great point. Like, the internet really allowed people to connect with others who shared similar insights and values and philosophies in a way that they couldn't in the meat space. You couldn't be in Australia and connect with someone in Ghana and feel like you were really understanding them. And you're just like, the physical distance is too great. Physical distance between someone in Perth and New York is too great. And suddenly the internet just brought everyone together. And we have more in common with people on our internet platforms on the other side of the world than we might have with someone in our own hometown. It was just such a revolution. So I love that we found this way to bring these niche communities with similar interests together. And then when you talk about metaverse, I love the idea that maybe they could come together in a more physicalized space. It's pretty exciting. And you guys severely underestimate when you say, do we really need one for cricket? Oh gosh. Oh, as an Australian, yeah.
I never said, do we really need one for cricket?
This is, cricket
right, this is what I was going to say. We can't call this a niche community. We're going to get blowback.
Yeah, this is a religion in Australia, in England, in Pakistan. Cricket is, I don't get it. Personally, I'm not on your side, guys, but I do understand how important this is to you and why you might need a metaverse. So it'll be interesting to see, these things all evolve. But Zach, let's wrap this up.
You know, since we're in the studio for the first time, I think I'm gonna make Jen wrap it up because that's just you just gotta roll
you gotta
with this. Just go for it. You got the studio. Wrap us up, Jen. You got this.
All right. Thanks, Zach. Well, thanks everyone for watching The Hash. I believe we have all about Bitcoin at 3. I don't have any of the notes in front of me, Zach. So you just let me know if I'm saying the right thing or the wrong thing. All about Bitcoin at 3 p.m. It's been so cool hanging out with everyone, and we will see you
Rested,
again,
tested,
same time,
and back in action.
same place tomorrow.
Can we get a little